doing anyways.
So, you know, this whole notion, and maybe we can go to Todd Schoenberger out in San Antonio and he can help us answer this. This notion that Alcoa is our bellwether for the market. I mean, I don't know why we still hold on to that. Todd, I'm going to throw it to you, Managing Director at Land Colt Trading. Is Alcoa still our bellwether?
No, and I completely agree with that, Tracy. I mean, it's not a true picture of the U.S. economy. I mean, it's nice. It's a Dow component. It kicks things off for us as far as the official earnings season. But realistically, though, we still need to see the numbers, and we're not seeing them on the top line. You know, the scary thing about yesterday's report, though, is that it's one thing to miss by a penny on the bottom line, but to miss like they did on the top line, and this is for an aluminum company that's really not the mainstay of the U.S. economy. So I'm a bit concerned right now.
Are you more focused then on, or does that make you more focused on Intel, Google, B of A, some of the others that we're going to get? CSX, a nice tell on the economy later on this week. Does it make you maybe a little more skeptical about what you might see?
I think so. I mean, I need to see something on the top line. You know, when we look back at third quarter earnings last year, you had 90% of companies beat on the bottom and on the top. Then on the fourth quarter numbers, we actually only saw 70%. I would need to see some type of growth on top line. I need to see revenue growth there, and we're not seeing that. And I really think that that has a lot to do with the dismal labor picture in this country.
Yeah, and Todd, we've been saying this now. We're going on like our third quarter of, okay, we've seen profit increases because of cost cutting, and now we need to see that top line growth. We've been waiting for a while to see this, and we're not. So is it because we're not working, therefore we're not buying anything, so the consumer is still struggling to go out there and shop?
Yeah, that's exactly it, Tracy. I mean, ultimately, you don't have the confidence that's there in the labor picture right now. I mean, it is dismal. We still have a 9.7% unemployment print. You still have first-time jobless claims that are north of 400,000. You know, that's causing a lot of concern for people that are actually out looking for a job, and therefore it's going to have a dent inside discretionary incomes that are there, and therefore a negative impact on stock valuations. So yeah, I think that you hit the nail on the head. I mean, here we are. We're supposed to be living this, you know, in this great economy right now with great GDP, and we're supposed to be looking forward to an exciting earnings season. Yet the Dow, I mean, it's kind of plain vanilla right now. We haven't really seen a lot of excitement on Wall Street.
And you seem to think we've got another shoe to drop here coming up in housing, and you have your own personal story involved here as well.
Well, I am selling my house right now, but ultimately, though, what I am seeing just around the country is that there is a tightening of prices right now. You have the homebuyer tax credit that expires in just 2.5 weeks, and there hasn't been a single whisper coming out of Capitol Hill that this is going to be extended. So therefore, you're going to see a lot of price wars going on. You actually see some regional parts of the country where you have inventory of homes for sale that have actually seen prices drop by 10% just over the last 2 weeks because people are in a desperate need to sell their home, and they're feeling that if they don't sell it by April 30th, forget about it, and they're going to have a lot of trouble. I think that is going to be the catalyst for a huge downturn in the U.S. economy, but also in the equity markets, because people will be facing foreclosures. People will not be able to get a home equity loan, and it's going to be a dismal situation. I'm trying to be optimistic for you guys, but the short-term outlook just does not look that clear to me.
But why so much in housing? I mean, I'm sort of a downer in housing as well, but is it because you think that rates are going back up? Is it because we haven't seen credit loosen as much as people like to say it has? Are the banks still on edge? Is that part of why you think the summer's really going to be rotten?
Yes, yes, and yes. I mean, you don't have banks that are lending out there. Interest rates are inevitably going to go up. I mean, you will see that. I mean, the Fed is even hinting at that right now. And we've kind of seen that a little bit in the 10-year Treasury. But now, when you go forward, yeah, banks still need to lend. And they're not going to lend out to people that, one, they don't have a job. Or they may have a job, but they're still in shaky ground. You know, you still need to get a loan, ultimately. And if banks are not going to lend for a 30-year mortgage, how are you going to buy the house? It's impossible.
What do you like right now, if anything? I mean, you sound pretty bearish, and that maybe you might want to add to your cash position.
Well, I've been saying that. I mean, you should be thinking about being as liquid as possible right now. I mean, I think if there's one thing that we learned over the previous bear market and the recession is that liquidity is as critical as it gets. But ultimately, though, I do love oil, and full disclosure, my firm does have an oil and gas trading model, but I do like oil. I know oil is trading in the mid-80s right now, but when you look at the entire global economy, everybody uses crude oil, and they don't just use it for petroleum-based products. They will be using it for things like plastic, carpet, for example, and you think of former underdeveloped countries that are now economic superpowers, like a China, if you will, then those are countries that are actually going to demand more crude. So I'm a big fan of oil,
you like it,
only because of the supply and demand economics.
Yeah, you like it play in the USO, for example, or you like large integrateds? How do you want to play that?
Okay, I do like some of the refiners. I mean, when you look at Valero Energy, I do like Valero. Well, only because they actually have a monopoly on refining heavy sour crude, which is what Valero specializes in. I love Occidental Petroleum. I also like Transocean. I mean, you think about, you had the president just come out recently about offshore drilling. Transocean actually leases those rigs. So companies like an ExxonMobil and a Chevron will actually rent the rigs to go out and drill thousands of feet underneath the ocean surface. So I'm a big fan of oil, but across the board. And I also got to go back to the higher gas prices in this country. If you really want to take advantage of it, you really should start looking at some of the ExxonMobils or the ConocoPhillips of the world, because those are the companies that will do well with higher gas prices. I mean, it just happens.
Todd, last question before we let you go. You have liked the travel and tourism industry for months now. You still do, even with the consumer struggling. No money. We still like tourism.
Definitely love tourism. You look at the hotels, the airlines, the cruise lines, all of them are doing very well. They're beating the S&P 500. The Dow Jones Travel and Tourism Index is actually more than double the S&P 500 this year. I think a lot of it, though, has to do with foreign travelers. I think people taking advantage of a weaker dollar. Some of the deals out there are fantastic, and people are going on vacations. We just went through a spring break period. We're about to hit a vacation time. Yeah, you do have a lot of unemployed or underemployed Americans, but you still have some people that have the resources to go out and travel. I think that is a great area to start positioning money, especially on a safer scale, if you will.
Todd, great to see you as always. We'll talk with you down the road, all right?
Thanks, Todd.
All right. Thanks for having me.
Good luck selling your house.